Check, please.
Hey, welcome back to Everything Money. Alibaba is down some more, Paul. We've been in love with this stock for many months. You own this stock. Mo owns this stock. I own the stock. My 11-year-old son loves this stock. But it's down again, Paul. And at what point do we wave the white flag? Or how long are you staying on this puppy? Because it's heading down.
All right. So I looked at my account today, and I think I'm down like now 48% of my Alibaba investment.
You dummy.
I am a dummy. Now, with that said, we preach all the time that it's all about looking at the facts versus the emotion. So what's the emotion here? The emotion is China could delist this company. This has been a threat for a long, long time. The emotion is the VIE structure. This has been a threat since Chinese companies have been in the US. What I look at is now China's getting involved in this Russia-Ukraine business, and they're talking about invading Taiwan and all these things, and I get that. And trust me, I do not try to deny that's a big issue. But I also look at Alibaba.
There's one more thing.
Oh, wait, one more thing. What is it?
Tencent got in trouble. They're being investigated for money laundering. So now everybody's thinking, oh, this is probably in all other Chinese companies.
So I'd be more concerned if it was just Alibaba falling, but it's all Chinese companies. What happened to the Chinese stock market?
The Chinese stock market closed down 7.2%. It was the biggest down day since 2008, the financial crisis.
Even they didn't have as bigger a day
during COVID.
in COVID?
Correct.
Really?
Yeah.
Wow. Okay. Yeah. So let's go pull up Alibaba in our 8-pillar software. Baba.
Oh my God, it's $80.
Oh yeah. So guys, my base in Alibaba is 154 a share, I believe. 155, something like that, right? Mm-hmm. I might be buying more shares here, and here's the reason why. I look at this company and I look at the max chart. So guys, this is the max chart of Alibaba since it went public. Back in September of 2014, it was $94 a share. It's currently $80 a share. Now, you might sit there and say, that's terrible. What I look at is the income statement. In 2014, they did $11 billion in revenue. They did $132 billion last year. Okay, profit. In 2014, they made $4 billion in profit. Last year, made $10 billion in profit. More, but looks like there were a couple of write-offs here because look at this. It was big difference here.
$25 billion, yeah.
Guys, I'm looking at this saying, cash flow. Let's go to the cash flow. Now, for cash flow, we have to go to annual because they don't report the same as American companies. They did $1.9 billion in cash flow 10 years ago. They did $30 billion last year. Guys, I guess my thesis of all this is, here's where I start. One, do I think this company is selling for a cheap price relative to today's value and future value? Mo, what do you think my answer is to that one?
Yes.
Okay, so the answer is yes. My next question, do I think this company will be around for the next 10 years?
Yeah.
My answer is yes on that one. Third question, do I think they'll make more revenue or less revenue 10 years from now than today?
More.
Do I think they'll make more profit or less profit than they do today 10 years from now?
More.
So I look at it saying, all I'm reacting to now is what could happen to the stock. I've called Merrill. Mo has called Schwab. We said, if they delist from the US, what happens? Paul, you get Hong Kong shares. Okay, what does that mean? Well, you just own the company in Hong Kong. Okay, so what does that mean? It means that if you sell the stock, it might take you a few weeks to get the money out of Hong Kong into your account here. Oh, okay, I'm good. They're like, yeah, we've had this happen before. It's fine. Now, could they be wrong? Sure. When we had an interview back in December, we had a great interview with Manish Prabrai. Go watch it. It was phenomenal. Manish did sell his Alibaba stock, but not because he didn't think it was a good value. He did it for tax loss harvesting purposes. But as analysts were in the office, we were just shooting the crap about it. And they all said, what's the big deal about owning international stocks? Warren Buffett has talked about international for decades. I've read that Warren Buffett's personal portfolio owns stock in South Korea. He buys these companies. Now, does that mean Charlie Munger has increased his portfolio on... Now, does that mean to me that Charlie Munger bought it, therefore I'm buying it? No. But my concern about buying Baba originally was, I don't know if I necessarily understand the data and trust the data. He trusts it, I'm in. He's doubled his position in the last few quarters. I'll be interested to see, after this quarter's done, what his position is later.
Please be very clear to listeners. There are some YouTubers out there who are experts at this that own like 40, 50% of their entire life savings in quote unquote growth stocks. You're talking about a very minimal amount of your portfolio.
My portfolio right now, after the fall, is about 1.2% of my portfolio is in Alibaba. I'm up this year on my portfolio even though I have Alibaba stock that's down 50% essentially. I'm still up this year. So I look at it as I'm trying to get a diverse group of companies. Now, do I believe in Alibaba? Absolutely. Has the story changed yet? For me, not yet. Does that mean it won't change? No. Something could happen that makes it like even Tencent. I'm hearing that going, man, I would be like, what's going on with the money laundering thing?
That one kind of actually made me feel, I don't know, more at ease, because I was thinking like, if they're going to start going and blowing up these companies and saying, okay, here's fraud here, they probably would have done it close to a similar time frame. And I was like, well, they just got Tencent. They haven't said anything about Alibaba. But at the same, also, this is the perfect example of the stock market being a voting machine versus a weighing machine in the long run.
Yep.
Voting machine in the short run, weighing machine in the long. This is exactly what that is right now.
How low can this price go, Paul, before you just say, you know what, I've had it? Is that an option in your mind, or what do you think?
That is a phenomenal question, Seth. Apart from the story changing, I plan on sticking around with it. And the reason being is I want Baba to keep growing and growing and growing, keep increasing their revenue and profit, and I keep buying shares at a cheaper price. Apart from some fundamental reason why I can't buy it anymore because of, you know what? All the numbers were a scam, or their revenue growth is going to be negative for the next 5 years, or whatever it is. I'm still making a play on this. The best company to come out of China, and China's trying to become an economic superpower. They're not going to do that without the help of Alibaba.
What about our normal viewers at home? You know, people watch our videos. They fall in love with companies, whether they get a full grasp of them. And even though we tell them not to buy them, you invest different from a normal person. And maybe they even bought when this was in the 300s. How long do they hold on for, Paul?
Hold on as long as you can stomach it. Like, I saw it this morning and laughed and texted Mo. I'm like, did you see Bob this morning? He's like, yeah. I'm like, damn. It makes, but this is why, if it was 20% of my portfolio, you better believe I'd be like going, what the heck happened here? But I only invest what I can afford to lose. Spoiler alert. My plan when I'm 100% invested in the market is to put 80% of my portfolio in a magic formula type of investment. And the other 20% to buy between 5 and 10 individual stocks. So I'm going to have 80% in 30 or 40 stocks that fit a certain criteria, and then 20% into 5 to 10 stocks that are like Baba, like Facebook, like Intel, like Walgreens, like the ones I'm talking that I own. Because I don't want to sit there and live and die by one company doing well. A lot of people like Warren Buffett and Charlie Munger believe in high concentration of assets if you really believe in something. I'm not like that quite yet. Okay, I might become like that someday, but I like diversification. I like the idea of, okay, 1 year, I don't need to make 20% a year. I don't need to make 50% a year. I'm very, very pleased making 12, 13, 14% a year and selling options along the way to increase my returns. That's what works for me. What works for you is the emotional part. The great news is, from the emotional part, we have our software here that you all see right here, right? It shows the 8 pillars on everything. But the other thing is this part right here. The EM community chat. Guys, when you subscribe for our software for only $1 per day, this is the best part. Not only a stock analyzer tool that'll put all the assessments, all the assumptions you put in and tell you what you pay for the company. This part, you can go in the chat. There's over 6,000 people in there. Search for Alibaba. There's a whole chat dedicated to Alibaba and China stocks. You can have a conversation about Alibaba specifically, about China stocks specifically, and say, what are you guys doing? And some people are like, Paul, I got to throw the towel in. I'm getting too worried. I understand. Other people are like, this is great. I'm buying more shares. I got a text yesterday from a good friend of ours who goes, how do I not put everything in a Baba if it hits $50 a share? I go, I wouldn't do that. I told him that. I go, I wouldn't do that. But he's gung-ho about it. I don't know. Listen, the whole point is, if I had 100 companies like Baba with these financials and everything at these valuations, I would own all 100 of them. I would love it all day long. I would never blink an eye. But there's still a chance that we're wrong about it. That's why I don't put a big chunk of my portfolio in it. Okay? And that's the big key here. Now, one thing I want to show you guys. Look at analyst expectations for revenue for the next 6-7 years. They did 135 this year. It's going to almost double. Is that a huge jump? No. But I made my assumption on Alibaba based on 8 or 9% revenue growth. There it is. Okay. Actually, their worst percentage revenue growth was 8.9%. I'm not saying analysts are right, but this is just consensus. Look at earnings per share. Earnings per share, $8.26 to $15.78. Guys, at $15.78 per share, it is selling for 5 times that amount right now. Right? It's supposed to sell for 15 times. That is $2.30 or $2.40, whatever the number is, if they hit this number. Let's say it's just in half. Let's just say they do exactly the same amount of profit, $125 a share. It's a double just from here almost. Not a double, but 60% jump. I just look at this saying, do you think Bob will be around 5, 6, 7, 10 years from now? Do you think the revenue will be higher or lower? Do you think the profit will be higher or lower? If the answer to all these is higher, and yes, it'll be around, apart from something fundamental, because the books are great. The balance sheet's good. I just, like, that's my take on it. And I could very well be wrong. But don't put any more money in there than you're okay saying. We had a friend of ours the other day text me. And he said, Paul, I want this advice on Baba. I said, honestly, if you don't get it, you shouldn't buy it. He goes, yeah, I know that. But I'm like, listen, if you're going to buy it, literally put some negligible amount that you don't care if you lose every penny of it. And if it goes up 5, 6, 7 times, you'll be like, oh, that's cool. He goes, okay, good advice. Because he just wants to ride it because we said it. I'm like, listen, I just wouldn't do that, though. Do your own homework. That's my take on Alibaba.
That's a lot of work to do your own homework. That's why I like listening to you.
Well, that's why you join the Everything Money community.
I guess you're right.
Because I'm lazy too. I go in there to see what people are saying. People sit there. Remember the whole VIE? Keep in mind, guys, here's the point of emotion. Mo, how prevalent was the VIE structure conversation 3, 4, 5 months ago?
It was everything.
It was everything.
It literally dominated the news.
Please tell me the last time you heard about VIE involving the Baba.
Nothing. Even now, you still don't hear about it. It's just the next news story. Yep.
Something will change. Either it'll go to... At this point, it's now selling for a price where I go, do we think bankruptcy is going to happen? Do we think it's going to be eliminated? Like, I mean, if it goes to $50 a share, I look at it going, okay, it's just going to take a few value investors to pick it out and go, this is a no-brainer for us. Now, am I down 50%? Yes. But am I dollar cost averaging? Absolutely. I have puts at 100, so I'm going to get assigned shares at 100, and I have puts at 75, which look like they're probably going to happen. Okay, my base is going to go lower and lower. It's still losses. Don't get me wrong, it's still losses, but I look at this saying, man, I don't get why this is so cheap.
While you're losing money on your Alibaba shares currently, you can be trading it in the Business Nation with Mo, like Paul and I do. Mo, what's going on with the charts over there?
So guys, I've said this a million times. I do not like trading these Chinese stocks. And the reason is because what we see today, look at this. I mean, I'm going to zoom in real tight here. These drops that you see, and then these big drops, these big jumps all over the place. It's just, guys, it's not worth it to go and trade any of the China stocks, in my opinion. Now, from a day trading perspective, it's different. JD.com, was it Momo? Those
DD.
I just don't, DD. I don't like the volatility. I'm a pretty conservative guy when it comes to trading. I don't like the volatility.
You mean a longer term trade? Longer
term trades. So this is a 15-minute chart. I would absolutely come into the 15-minute chart. I mean, even the bad thing is this move that happened, this big 9% drop, whatever it is, it happened overnight. So we don't really have a lot of fluctuation today. I would be looking at this tomorrow, though, because tomorrow everybody can get excited. It comes right back up. Maybe we'll get our stochastic over 80%. We'll get some good buying volume coming in because people realize that the reaction was ridiculous. And we'll have some good candles and we can go and buy this tomorrow. So I'm definitely going to look at this tomorrow from a day trading perspective. But guys, seriously, from a daily chart and a long-term chart, do not get involved with trading these. That's the best advice that I can give you. Only day trade these things.
Be cautious with this one, as we say in every video. Don't buy because we do. We just like the numbers. And sometimes, Paul, I like the concept of find a great business, as Warren Buffett would say, and Charlie Munger, find a great business and find it really cheap. And this is really cheap territory.
Yeah, if you were able to buy the stock today and then also they shut the stock market for the next 7 years, that could be the best thing that ever happened to you. Because you would forget about the emotional aspect of it. Take yourself out of the emotion. Stop looking at your stocks. Guy Spear put his Bloomberg terminal in a far off area of his office and doesn't even put a chair there so he can't get comfortable. Brilliant. Brilliant. That's it. And if you don't have the emotional fortitude, that's fine. I don't either in many aspects of life and in many aspects of investing. I do in this aspect. Well, it also helps that I'm up this year. Even with Alibaba, it also helps that my NASDAQ short is doing very, very, very well. So it's easier for me to go, it's okay. But I'm just as susceptible to emotional things as you are, guys. It's no different. We are all the same people. We have to just work on ourselves over and over. And that's what the community is for. That's what software for. That's what all this is for.
That's our take. Hit the subscribe, fondle the like. We'll see you next video.